Okay, good afternoon everyone and welcome to today's webinar, The Evolving Automatic Enrolment Landscape. We've just completed a sound check 10 minutes ago with people who logged on early, so far there's no sound issues. To introduce myself, I'm Karen Bennett and I'm the Marketing Manager here at BrightPay. Today's webinar has been designed to give you an insight into upcoming changes happening this year, including new employers, phasing and re-enrolment. Today's webinar is CPD accredited and you can benefit from 1.5 CPD points. If you would like a CPD cert, please fill in the survey at the end of today's webinar and we will send you out your cert within the next few days. Now you're quite welcome to type in any questions that you may have into your question tab there on your control panel and we'll have a Q&A session at the end. Today's session is being recorded. We will automatically send you a copy of the recording along with the slides in a follow-up email. So before I get started, let's just have a quick look at the agenda for today's webinar. So first up, we will consider new employers and how automatic enrolment affects them. We will then move on to looking at the new contribution increases that are now in effect and how to support your clients and their employees regarding these increases. We will also have a look at the ongoing auto-enrolment duties, including re-enrolment. Finally, we will give you a demonstration of how BrightPay handles these changes and also take a look at BrightPay Connect, which will help you with your upcoming GDPR requirements. Okay, so auto-enrolment and new employers. At this stage, we have reached the end of the rollout of the staging date process, whereby all employers had a staging date to kickstart their employer responsibilities. Going forward, all new employers will be affected by auto-enrolment with immediate effect. If a client becomes a new employer or became a new employer after the 1st of October 2017, they do not have a staging date. Instead, they have a duties start date, which kickstarts their auto-enrolment duties. Your client should be ready to comply with their legal auto-enrolment duties as soon as the first employee begins employment. Where your client is a new employer and about to employ someone for the first time, they will need to complete certain tasks in preparation for auto-enrolment. Once they have registered as an employer with HMRC, you or your client will need to inform the pensions regulator of the chosen point of contact for auto-enrolment. So basically, it's just like when an employer reaches their staging date, the new employer will be required to choose a pension scheme that will be suitable to their business and for their employees. On the first pay date after the duty start date, similar to staging, all employees must be assessed to determine whether or not they need to be automatically enrolled into a pension scheme. Any eligible employees must be automatically enrolled into a qualifying auto-enrolment pension scheme where the employer must also make contributions to the pension pot. Increases in minimum contribution rates also apply to new employers, where if an employer reaches their auto-enrolment duty start date on or after the 6th of April 2018, they will be immediately required to comply and implement the total 5% contribution rate. Equally, employers who reach their duty start date on or after the 6th of April 2019 will need to comply with the total minimum 8% contribution rate. Postponement can still be used to defer the commencement of auto-enrolment deductions and contributions. This can be done for up to 3 months and does not apply to phasing or the increase in contribution rates. So increases in minimum contributions. By law, minimum contribution rates for auto-enrolment are set to increase. There are 2 stages to the increase in minimum contributions which have been described as phasing. So the first increase took place on the 6th of April, so last week, and the second increase will take place in April 2019. On the 6th of April 2018, the total minimum contribution rate increased from 2% to 5%. Employers now need to contribute a minimum of 2%, with employees contributing the remaining 3%. Minimum contributions will undergo further increases on the 6th of April 2019, with the total minimum contribution rate increasing to 8%, representing a 3% employer and 5% employee contribution. It is an employer's responsibility to make sure they are prepared for the new contribution rates. Now, the employer and the employee can choose to contribute a higher amount to the pension scheme if they wish. If an employer chooses to pay more than the employer minimum, but less than the total minimum amount, then the employee must make up the difference. If an employer wishes, they can also decide to pay the total minimum contribution rate, which is 5% from April 2018 and 8% from April 2019. In these cases, the employee does not have to pay any contributions unless the rules of the pension scheme say otherwise. In certain cases where the employee and the employer are contributing above the current minimum requirement into the workplace pension scheme, an increase in contributions will not be required if the total contribution is above the new minimum contribution rates. If an employer is making pension contributions as part of a salary sacrifice agreement, it is important to note that their employees' contracts of employment may need to be reviewed and amended as a result of phasing. For example, consider an employee whose current contract of employment states that they will sacrifice 1% of their salary in return for the employer to pay the equivalent amount into the pension scheme, along with their own 1% employer contribution. You'll need to ask how you will meet these new requirements in your contract of employment. So phasing applies to all employers who have staff enrolled into a workplace pension scheme. For employers who do not have staff enrolled, then they do not need to take any further action. It is important for payroll processors to know when and how much to deduct when the increases come into effect. And typically any good payroll software will automatically prompt you when the increases happen in real time. The pensions regulator is advising employers and payroll bureaus to check with their current payroll software provider to ensure it can handle and calculate the increased contribution amounts. It is important to note that increased contributions are required to be processed on the first pay date after the 6th of April. Therefore, you must take steps to ensure that the increases have been put in place correctly, particularly for the first payroll run. So unlike the initial assessment and enrolment at staging dates or your duty start date, it is not a mandatory requirement to inform or write to staff about the increases in minimum contributions. However, it would be considered best practice to clearly communicate with employees to let them know before or even when the increases take place. This will help minimize confusion and reduce queries. Some of the pension providers have already chosen to write to members, and the pensions regulator also has a sample template letter available to give to employees, which should help them understand the upcoming changes. This letter is also available in BrightPay within the pensions utility. So integration between payroll and pension systems. This year we will see an increasing number of key pension providers developing an API option that will allow the payroll software to fully integrate with them. Certain pension providers such as Nest have made real headway in terms of automation. Direct API integration allows payroll software and the pension scheme to communicate or talk directly to each other, which is a very similar concept to RTI. API integration means that users no longer need to export and save the data file to their PC and then log into the pension provider's web portal to upload the pension data. Instead, data can be sent directly to the pension provider at the click of a button from within the payroll software itself. And I'm sure at this stage, the majority of you have already used the Nest API with your current payroll provider. So this method of sending information between two systems will be of particular interest to payroll bureaus who could have a large number of payroll clients. The integration will enable bureaus to reduce error and minimise the time spent submitting their client's file to the pension provider each pay period. At the moment, BrightPay has API integration with Nest, Aviva and Smart Pension. I'm delighted to say that BrightPay is the very first payroll provider to offer API integration with Aviva to our customers. BrightPay has further APIs with Nest. One is to validate groups and payment sources, and two is to approve contribution payments from within the software. This integration further streamlines the setup and ongoing tasks involved when using Nest as your pension provider. Going forward, we will offer further API integration with other pension providers this year. Currently, we are working with 2 other pension providers, including the Pensions People. We'd hope to have this API integration available over the coming months to be released to our customers. Now, just to let you know, API integration with the pension providers is actually developed by the pension provider themselves, where the payroll software can then integrate or plug into their API facility. So it's very much up to the pension provider themselves to offer this facility, where we then, the payroll provider, can then plug in to their system. So re-enrolment and re-declaration of compliance. So every 3 years, employers must put certain members of staff back into an auto-enrolment pension scheme, and this is called re-enrolment. Some of the larger companies have already gone through the re-enrolment process. Your duties will vary depending on whether or not you have staff to re-enroll. The first step is to choose your re-enrolment date, and this should be done as soon as possible. Your re-enrolment date is chosen by you with a 6-month window to choose from. Therefore, you may decide to align your re-enrolment date with other business processes, such as the start of the financial year, or to avoid seasonal peaks. This re-enrolment window falls 3 months either side of the 3rd anniversary of your staging date. Regardless of whether or not you have used postponement at your staging date, re-enrolment occurs 3 years after your staging date and not your deferral date. The chosen re-enrolment date will apply to all staff, and you can't use different dates for different staff members or groups of staff. Also be aware that postponement cannot be used for re-enrolment. Once you reach your re-enrolment date, you will need to assess certain staff to work out if they need to be put back into the pension scheme. And you only need to assess staff who have previously opted out or voluntarily ceased active membership of a qualifying scheme. You must determine whether these employees meet the criteria to be automatically re-enrolled. You must re-enroll anyone who left your auto-enrolment pension scheme more than 12 months before your re-enrolment date, is aged between 22 and state pension age, earns over the earnings threshold, which is currently £10,000. You also have the option to re-enroll various staff members. For example, directors, those who are a partner in a limited liability partnership, those who left the scheme within 12 months of your re-enrolment date, those who have given notice or have been given notice at the end of their employment. Having worked out which staff must be re-enrolled, you must now put them back into a pension scheme within 6 weeks of your re-enrolment date. It is your legal duty to write to each member of staff you have re-enrolled into your pension scheme. This also must be completed within 6 weeks after your re-enrolment date. You do not have to write to staff that are not being put back into the pension scheme. All employers must complete the re-declaration of compliance, even if you do not have staff to re-enroll into the pension scheme. This basically informs the pensions regulator that you have completed your automatic re-enrolment duties. So just make sure that your chosen payroll software can handle the re-enrolment process and ensure there is no additional charge for auto-enrolment or re-enrolment functionality with your chosen pension provider or payroll provider. Okay, so how BrightPay automates auto-enrolment. We're now going to have a look at how BrightPay supports the new employers with regard to the new automatic enrolment duties, as well as how BrightPay handles the increase in minimum contributions required from last week. So I'm now going to pass you over to Victoria Clark, who is our support manager here at BrightPay, and she'll take you through a quick demonstration of BrightPay. So thanks.
Great. Thank you, Karen. Good afternoon, everybody. So I just have a demonstration company here this afternoon to show you, and this is based, as Karen has just mentioned, on being a new employer. And all the employees you can see on screen, I have them set up to commence employment from the 14th of April, so they are starting in the employment this current week. So I'm just here in the payroll utility, and you can see straight away that BrightPay is prompting me that I have automatic enrolment duties to perform for my employees. So the automatic enrolment duties are kicking in straight away in line with my employees' commencement date. So before I can perform any automatic enrolment duties, i.e. enroll any employees, I first must enter details of the pension scheme I have chosen. And to do this, I'm just going to go to the pensions utility in the software, and I'm going to click on Add New Scheme. So on the screen there, you can see that BrightPay currently supports 18 pension providers. They're all listed here for you in alphabetical order. And when we offer dedicated support, that means that BrightPay can actually produce the required pension files that you need to upload into these pension providers' portals. Don't panic too much if you are, or if any of your clients are with any other pension providers that we don't cater for. We do have this other automatic enrolment scheme option here, which will allow you to set up the pension scheme and enroll employees into it. Just the one thing to bear in mind is that we then, however, just can't produce those pension files for you for upload. So you would probably just need to log into the pension providers portal and manually enter those accordingly there. So I'm just going to use Nest as our example this afternoon. So I'm just going to choose Nest from my listing. Just complete each screen accordingly here. So the first screen here is asking for my employer reference, which Nest will be providing if you go with Nest. You can then choose a submission method. So Karen mentioned there that some of the pension providers we offer dedicated support for do have an API that we offer. And Nest is one of those. And if you just click on the little drop down here, you can see that I can choose between CSV file upload or Nest API integration. So I'm going to leave it as API so I can show you that shortly. I then just move on to the next section here. And for all the pension providers we cater for, you just have to fill in the information that's relevant to them. So first of all, Nest require me just to fill in what my group names are. I will have set up groups with Nest when setting up the account. So I'll just say that I have a group called Weekly here. It's in this screen as well that you tell BrightPay what your contribution type is. So if you click on the drop-down menu here, so i.e., are you using the phased minimum contribution rates, for example, or are you using your own customized contribution rates, which will allow you to come in here and type them in as required. You may be operating fixed amounts each pay period rather than percentages, so we do offer that option as well. So you can type in any default contributions here. So just for today, I'm going to use the phased minimum contribution rates. And you can see here now, obviously, we're into the new tax year with the new phased minimum rates in place. So my contributions will be 2% and 3% here. It's in this screen as well that you instruct BrightPay what your earnings basis is. So by default, we have standard qualifying earnings showing. And this is where there is a lower limit and an upper limit for the pension contribution. And so any earnings below the lower limit will be excluded from the pension calculation, and likewise any earnings that fall above the upper limit. So if you're operating in that manner, you're going to leave it as standard qualifying earnings. If, however, you wish the pension contribution to be on the full amount, so the full amount of an employee's pay, you're going to choose custom qualifying earnings here, and you can remove the limits there. Okay, so just set it up as you need to there. If you have further groups to add, maybe you're with a pension provider and you have different groups to accommodate different contribution rates or different pay frequencies, then you just repeat the process here and then save your setup there. If I return to the payroll screen now, so you can see here that BrightPay is automatically assessing my employees for me based on the date of birth I have entered for each employee and their level of pay. So you can see my first employee here in my list is Jemima Appleby, and she has been assessed as an eligible job holder by the software. So I'm going to click on View Options here. And for this worker category, I'm given 3 options. So I can enroll her, postpone, or mark as exempt. So I'm just going to enroll the employee here. So my enrollment date is shown as the 14th of April. I'm happy with that. And from the drop-down, I'm just going to choose my scheme. So she's a weekly member of staff. I'm going to choose my weekly group here that I've set up. And you just then need to choose the relevant tax relief. Some pension providers only offer one tax relief method. Some offer net pay arrangement as well. So you just need to make sure you choose the correct tax relief option for the pension scheme you are operating. Nest only operate with relief at source, so hence that is the default here. If I just want to enroll the one employee, I just press continue. However, a useful feature in BrightPay is the ability to enroll multiple employees with the same settings as I've selected above. So if I choose enroll multiple employees with these settings, I've got 5 employees who are being assessed as eligible job holders, and I want to pop them all into the same Nest scheme there. So I'm going to select them all, enroll them. Okay, and those 5 employees are now enrolled for me. What BrightPay will do then for you is create the necessary communication letter that you are required to give to your staff. So when you enroll an employee, you are required to give them an enrollment letter. That letter can be viewed and generated by clicking the letter option here. And BrightPay offers various ways of getting this enrollment letter to the member of staff. You can either print it for posting or handing out. You can export it to PDF if you wish to send these over to a client for them to then deal with. You can email them directly to the employees if you have an email address entered for them. And if you're using BrightPay Connect, which Karen will be showing you in a second, you have the option to upload it into the employee's self-service portal as well. I'm not connected here, so I don't have that option. Likewise, if I just do a print preview here, so our communications letters that we have throughout the software, these are based on the pensions regulators letter templates. So all the information is what needs to be there for you. It's all in place for you there, and all you need to do is just print or email as desired there. What you can do then is either just print for or email for the one employee and then mark it as done. But again, you can batch process them by choosing one of the options here. Okay, and so that BrightPay knows that you've done the letter, you can then mark as done. And again, for multiple employees, I can select that, and when I return to my payroll screen, the flags have disappeared. Okay, so those 5 employees I've now dealt with regard to their automatic enrolment duties. My next employee is being assessed as a non-eligible job holder, and we have 4 options for this worker category. So for non-eligible job holders, you are obliged to give them a letter telling them that they have a right to opt into a pension scheme should they choose to do so. And again, BrightPay does that letter for you. Again, if I just generate it to the screen for you there. So again, all the information is in there for you. It's just a case of printing or emailing as you require. Okay, and I'm going to just mark that as done there. Okay. So when I return to the screen here, so now he's got his letter there. Simone Pendleton, then she's been assessed as an entitled worker, and again the same 4 options. So again, you do have a right to provide the employee with a right to join letter if they're being assessed as an entitled worker. You then have the option if that employee returns to you and says they would like to join, that you have the button where you facilitate that and trigger that joining. And you can postpone or mark as exempt there. Okay, so BrightPay facilitates postponement as well, as you can see. And if I was to postpone this employee, I can simply hit the postpone button and I enter the employee's deferral date. So this can be a date up to 3 months away, basically after the 14th of April. So say I want to just defer until the 1st of June. I type that date in. Again, I can postpone one employee, or if I have more than one employee to postpone up to this date, I can use the multiple postponement option here. I'm going to select those 3 employees. Okay, and those 3 employees are now postponed until the 1st of June. Again, BrightPay will automatically create the postponement letter, which must now go to the employees. And again, I'm just going to click on letter. You have the same options here for generating the letters. And once the employees are in receipt of it, again, you can mark as done for multiple employees. Okay. When I return to my payroll screen now, you can see all my flags and alerts have disappeared. So I've dealt with every employee I needed to. If I just take a look at my first employee, she was somebody I enrolled. So you can now see my phased minimum rates are being applied to her payslip, 3% and 2%. And you have a breakdown of the amount on the right-hand side. And if I just finalize this first pay period and I go to print a payslip, you'll see that the employee's payslip clearly references the contribution being made as well. And again, at the bottom, you've got the year-to-date amounts as well for both the employee and the employer contribution. You'll now see the number 2 has appeared next to my pensions utility, and that is now to notify me that I have 2 pension files that I need to submit to my pension provider. I'm just going to click in here. So Nest are an example of a pension provider that require 2 files. So first of all, they need an enrolment file, which is basically telling them of the new members that Nest need to enroll at their side. And then you will have a periodic contributions file that you need to submit to them on an ongoing basis at each pay period going forward while you have staff enrolled. So to do the enrolment submission, I'm going to click into enrolment summary here. So this is on the API option here. So I'm given the button here, send enrollment submission. I'm just going to switch this off because I'm in a test environment and it does some cross-checking with your Nest account. Select my employees in step 1. Okay. Alter anything you need to here. You tend to find you don't really need to change anything here, but if you do, change it accordingly. Click on next, and at step 3, you literally press the send now button, and that submits your enrollment information into your Nest portal for you. Okay. Obviously I'm in a test environment, so I can't click the send now button, but what will happen is that Nest will receive that, process it, and if all is okay with the file, up at the top right you will get confirmation that your submission has been successfully received there. Pension providers differ with the turnaround time. Nest can be every 15 minutes or so. They can be up to an hour, so it just varies. But it's best just checking with your pension providers what their processing time is there in order to get a response. After your enrolment submission has gone in to the pension provider, you're then ready to submit your contributions information, so your contributions data to the pension provider. And again, a very similar process. You're going to come into contribution summary, click on send submission. Okay. If more information is required, you just need to fill it in there. Click on next, select your employees. If for any reason there has been no payment of a contribution, for example, an employee may have left, you can actually select that reason here. Click on next, and at step 4, again, you click on send now, and that will submit your information to, in this instance, into Nest for you. And again, once received and processed successfully, this message here will change and it will tell you that it has been successfully received there. So that's my first pay period completed. What BrightPay will do then on a continuous basis is it will continue to monitor your staff for you. So for instance, if I just select my employee here, Ronan, he was a non-eligible job holder in my first week. If I change his pay here, say to 500, you'll see now that BrightPay is kicked in automatically to now tell me, look, he's now an eligible job holder, and it will then prompt me that I have a duty to perform. So again, you just follow the alerts and select the option that's applicable. So I could now choose to enroll him, or if it was a temporary peak in his pay, unlikely to happen again, I could use the postpone option as well there. Okay. In the event that you enrol a staff member and they choose to opt out of the pension scheme and you get official notification of this opt-out, then all you would need to do is pop into the employee's utility, select the employee. Every employee has an automatic enrolment facility here, so I'm just going to go in here and you choose the opt-out option. And if I just press continue here, are you sure you wish to opt out, Jemima? I'm going to say yes. And if the employee is in that opt-out period, you'll see then that BrightPay will automatically refund any pension contributions paid to date on the next open pay slip. So you can see that she contributed £9.22 in my first pay week for her, and that's now being refunded, as well as the employer contribution as well there. Okay. Karen obviously spoke about re-enrolment. So re-enrolment is catered for in BrightPay as well. Obviously this is a new employer, so re-enrolment would be a good 3 years away. But if you were at the stage where you're re-enrolling, this is facilitated under the pensions utility as well. And if I pop into automatic enrolment here, this is where you enter your re-enrolment date. So as Karen mentioned, it's 3 years, in 3 years' time, and you have a 6-month window, 3 months either side of your original, I suppose, due to start date. So I could say here that I want to do, the 1st of June 2021. So it sounds a long way off, doesn't it? Yeah. But what will happen then if you're, obviously still using BrightPay at that point, at that re-enrolment date, BrightPay will automatically assess your employees again, and anybody who has opted out or ceased membership more than 12 months prior to that re-enrolment date will be automatically assessed. And very similar, the flags and alerts that you've just seen for new employers there, they'll be very much a similar thing. You just won't have the option to postpone there. Okay, so that just completes the demo of a new employer. I do just want to then just talk you through phasing there. So I'm just going to just pop back into, our slides here. Okay, so with regard to phasing, obviously the the first rate increase happened last week on the 6th of April. So if you've processed any weekly payroll in BrightPay, you may have seen the new phased rates kicking in. If not, if you pay your employees monthly, then it's probably still to come for you. But just to talk you through what BrightPay does with phasing. So here I have month 12 of my 17-18 software here, just to show you my monthly payroll. So the examples I have here is, first of all, my first employee, Benedict Taylor. In month 12, he was on 1% and 1%, so the 17-18 minimum rates. Okay. Casper here is an example of an employee who in the final pay period of 17-18 was paying a little bit higher. He was doing 2% and the employer was doing 2% as well, so higher than the phased minimum rates at that point. And then Hayley here, I just have as an example, she was paying, above the minimum rates, so 5% for her and 5% for the employer. Okay. So as soon as you have BrightPay 18-19 installed, obviously there is the import facility to bring across your information from the previous tax year. Okay. And now you can see here just with my print screen that I now have month 1 of the 18-19 tax year to show you. So if I just click into Benedict Taylor here, you can see what BrightPay does now. So he was an employee who had 1% on 1% in operation. So what BrightPay does, it detects that he is on the phased minimum rates and it has automatically uplifted him to the new rates that are effective from the 6th of April, so 3% and 2% there. Okay, so the user has nothing to do at all here. BrightPay takes care of it for you. Casper, he was 2% and 2%, so it has brought this information into your new tax year for you. But BrightPay is now detecting that even though he was above the minimum rates in the previous tax year, that he's now below the new phased minimum. And it's now asking the user to actually fix this. So what BrightPay doesn't do is assume you want to just increase the employee contribution. It's asking the user what you would like to do. So all you need to do is click on Fix. And if you wanted just to apply the minimum employee and employer rates, you can. Other options are available here too. Okay, and on clicking the relevant option, BrightPay will then uplift everything accordingly for you there. Okay, Hayley was 5% and 5% in the previous tax year, and BrightPay has done nothing with her because she is still above the new minimum rate, so it's kept her at 5% and 5% for you. So you've no flags or alerts, and there's been no change to her at all. Okay. Obviously, there may be some of you that rather than using percentages for the contributions, you're using fixed rates. And again, BrightPay will take a look at what the fixed rates are, and it will alert you if they are below the new required minimum level. So here you can see I've got £40 and £30 entered. So what BrightPay does in the background, it converts those fixed amounts into percentages, and it will, determine whether you're meeting the 5% rate that is now applicable. In this case, I'm below that, so it's going to give me the option to fix it. And again, I can choose the relevant option here and apply my chosen selection there so that you are now meeting the requirement. If I just return to my preview here, so when I finalize the payslips then in my new tax year, and click on OK, whatever change you have implemented, when you then move on to the following pay period, these will be held for you. So you can see that 3% and 2% is being held for my first employee and for Casper as well there. So you're only making that change in the first pay period, and then BrightPay will then hold onto your selection for you. Okay. Karen mentioned there about the letter templates that are available on the pensions regulators website should you or your clients wish to inform employees of the new changes to the rates. We also facilitate those letters in BrightPay as well. So if you go into your pensions utility and into your automatic enrolment option, you'll see a button here for letters. And this will allow you to generate letters to inform your staff about the minimum contribution increases. And again, these letters, they're all done for you, and it will populate with your employees' names, etc. And they can be printed, exported to PDF or emailed as required. Okay, so I do hope that helps. I'm going to pass you back to Karen now.
Thanks, Vicky. That was very informative. Okay, so you can see really that BrightPay really seamlessly handles phasing, re-enrolment and new employers for you, so it's fairly straightforward. I'm also now going to take a quick peek at BrightPay Connect. BrightPay Connect is our new add-on that operates in the cloud. It's an optional add-on that works alongside BrightPay on your desktop, and BrightPay Connect is in the cloud. The payroll itself is managed in the cloud and can be assessed online, but the payroll itself must still be processed on BrightPay on your desktop application. The online functionality allows online access anywhere, anytime, for payroll bureaus and accountants, clients and their clients' employees. BrightPay Connect automatically synchronizes and backs up data to the cloud, protecting against ransomware and cyber attacks. It will automatically back up a payroll file every 15 minutes when open, and again when the payroll file is closed. Restore. A chronological history of backups will be maintained, which can be restored at any time. So your bureau client dashboard. Accountants can give online access to clients' information via the employer dashboard. Sorry, just one second. Is my screen showing properly there, is it? Yeah, sorry, just double checking our technical side. So I'll click on the dashboard. So clients can log in anytime to see any of their notifications, their employer details, amounts due to HMRC, and any upcoming events. employees and their pay slips. So they can see all of their employees along with all of their employees' pay slips. Any payroll reports, so any payroll reports that you have set up as a favorite report will automatically be available on the client's portal. A company-wide annual leave calendar, so you can monitor all annual leave or sick leave, maternity leave, paternity leave, etc. Amounts due to HMRC, and employee documents such as your contract of employment or perhaps a company newsletter. So here we have our self-service employee portal where the employees can see their notifications, all of their employee details and any annual leave that they may have. Here they can view and download current and historic payslips and other payroll documents such as P60s. Payslips are automatically added to the employee self-service portal each pay period, which pretty much eliminates the need to print or email payslips. Employees will automatically receive an email letting them know that their payslip is available. The password-protected employee online portal will enable employees to easily submit holiday leave. So I'm going to request leave here. They can also view leave remaining and view leave taken. BrightPay Connect gives clients an interactive HR and annual leave management facility. Employers can view all upcoming leave in BrightPay Connect, in the BrightPay Connect company-wide calendar. Employers can authorize leave requests with changes automatically flowing back to the payroll software. So we can just hit approve there. Employers can also upload HR documents, as I mentioned, employee contracts and employee handbooks. So that's a very, very brief introduction to BrightPay Connect. We do run online demos every day, so it would be beneficial just to see the true value of this add-on, helping you towards your GDPR compliance. Okay, just to give you our BrightPay price point. So our BrightPay Bureau license includes unlimited employers, unlimited employees, free phone and email support for $229 plus VAT per tax year. The license also includes CIS, payrolling of benefits, batch sending RTI submissions, and a payroll journal export to accounting packages. Okay, we're just going to get ready for our Q&A, and while we're getting ready, I just want to say that with the introduction of GDPR, it is changing how we communicate with you. After the 25th of May, we will not be able to email you about more webinars or events, special offers, and other payroll-related news without you subscribing to our newsletter. You can subscribe to our newsletter in a number of ways: in the survey after today's webinar, in the follow-up email that will be sent out tomorrow, or on our website. And just to let you know, you can unsubscribe at any time. So our next webinar on GDPR is the 3rd of May, and I have to say they're very, very in-depth and very informative, so I would recommend that you log on to the GDPR webinar on the 3rd of May, and it's also CPD accredited and completely free of charge. Okay, so we will get started with our questions and answers. I'm just going to get up our questions here in front of us. I think we just... Okay, just bear with us. Okay. So question there for Simon, and I think this might come down to maybe your auto-enrollment assessment. Please let me know what and where you need to do to enter an eligible employee.
Okay, I'm not sure if this may be a timing thing, Simon, maybe, because is it regarding, I'm just wondering if it's regarding, is it with BrightPay? I can show you the enrollment process again if it is. I don't know if you just want to go a little bit more. Okay, yeah, so just with BrightPay. I'll just quickly show you there again, because I still have my demonstration company open here. Sorry, just bear with me. Okay, so here I have an employee who is an eligible job holder here. So all you need to do is click on View Options and you'll press the Enroll button. Okay, you just obviously enter your enrolment date as if you know it will default to your kind of in line with your pay period, but you can change it if need be. And then you're going to choose your scheme. So obviously you would have set that up in the pensions utility beforehand. So I set up 2 groups. So say I'm choosing the weekly one here, and then you just choose the tax relief that's applicable. So with Nest, in my example today, they only offer relief at source or none. The majority of people will be relief at source here. So you just choose your tax relief, press continue, and then the next step then is to create your enrolment letter that you must give to the employee. So you can print it or email it as required and then mark as done. If I just return now to the payroll screen, because when I set up my pension scheme in the pensions utility here, I've set it up that I want to use the phased minimum rates. Obviously, I'm in period 1 of the new 18-19 years, so BrightPay is implementing 3% and 2% for me there. And you can always check your settings here by clicking the spanner symbol. It'll give you a breakdown of what you have, kind of basically what the settings are for that employee, just to check. Okay, so I hope that helps there.
Yeah, just a follow-up question there from Simon. Will the payroll, I suppose, will BrightPay instantly flag up who is eligible?
It will. I mean, we can't reiterate enough, as long as dates of births are entered correctly and level of pay, so that you just need to make sure in the pay period in question that, you know, that the pay is correct. And BrightPay will use those 2 pieces of information, and yes, you'll get the automatic alert. It's constant monitoring that the software does. So if your information entered is correct, then BrightPay will flag up as it needs to for you.
Yeah, everything is automated. I know there's a number of other payroll software companies that you have to run a report every pay period, which obviously is time consuming. So BrightPay it's automated. It pulls out all of that information and tries to make life as easy as possible for you.
I'm just going to take that question at the end there, Karen, because it's just coming quickly. Where should AVCs be inputted? So because I'm just on the payroll screen here, all you would need to do here, Pauline, actually, just click the spanner and you can enable additional one-offs. So that's where the AVCs would go. So we kind of hide it by default for some of the pension providers. So that's where you find it if you need to do that. Okay.
Okay, another question there. I suppose while you have the software
exactly.
open, how do you reimburse expenses on BrightPay?
It just depends on what the expense is. We do have a preset. If I go into the employer utility here and into addition types, we do have a preset expense reimbursement here. Excuse me. That when you're in an open payslip here, you can just click on Add Expense Reimbursement and you can fill in the amount you're reimbursing. Okay, and it's ticked there to be kind of a non-taxable addition there. Alternatively, you can always set up your own by clicking on Add New Addition Type, giving it a name of your own. Obviously, if it's an expense reimbursement, you won't have any deductions there. So as you wish, we have the preset one, and then, as I say, you can set up one of your own too. Okay.
Okay. Just going back to a question that came in there earlier. How many employees and how many different branches can your software handle? I.e. 200 shops with, say, 400 staff. So I'm assuming here in this case that would be an accountant that might have 200 clients with 40 employees each.
Yeah, like if we're talking 200 setups, so kind of 200 employer files, then yes, we certainly have bureaus out there that are catering for that number, especially 40 employees in each. Fine, perfectly fine. We've actually done a lot of work actually for this new version, so for the 18-19 BrightPay, where we can handle large employers a lot better in terms of memory capacity. So we've made a lot of changes. Okay.
No. Sarah Simon's just come back there. So it's a one supermarket chain.
Yeah, you might maybe just touch base with us, Simon. Maybe if you want to give us a ring just so we can get further details about your setup, and we can maybe advise on that, just in case we just don't want to misadvise here.
Just so we understand what you're talking about, Simon. We do, I suppose, more in-depth online demos almost every day, and then we can address your specific questions there in relation to costings and any other questions that you have specifically in relation to the software there. Okay, so just reading through the question here.
Okay, yeah, that's fine. Yeah.
Okay, is there a recommended method for amending a pension contribution following a payment confirmation to the pension provider? The correction can be made for the payroll, but how will that affect pension contributions, or is this a manual exercise?
Yeah, this is quite a hard one to answer, to be honest, because all pension providers differ slightly. For example, obviously we've used Nest as our example today, and once you have triggered your payment with Nest, then you are blocked from making any changes. So obviously you can go ahead and make the change in the payroll. We never stop that. From a payroll perspective, you can always go and change the contribution at our side. It's then really communicating with the pension provider how they need to get that change into their portal. So really, it's contacting them directly.
Yeah. There's different rules for different providers.
Yeah.
Okay, if we put incorrect information into BrightPay, does a red flag appear in Nest? So that's probably maybe kind of a similar.
Yeah, the thing with Nest is, if anyone has an experience of using Nest, is Nest is so specific and they require all the information you enter in BrightPay, so in terms of group names, payment sources and payment due dates, etc., and even your pay periods, they all have to be aligned exactly with what has been entered in your Nest account. And the slightest thing will make your contribution files or your enrolment files fail. It can be a capital letter in BrightPay and that capital letter isn't in Nest. So it is so specific. What we do have with Nest, we try and validate as much as we can. So if you have your login details entered here under registration details down the bottom, what you can do then is go and validate your groups. Now, obviously, I'm going to test environment here, but what will happen here, if I was in a live environment, this would link into Nest and we can do a cross-check and we will tell you, look, your group names don't match, your payment source names don't match. So, yes, so we do as much as possible in terms of validating there. But yeah, by all means, if you're not seeing anything and you're struggling, give us a call and we can take a look for you there.
Okay. Doesn't seem to be too many more questions coming through. So if you did have a question, pop it into the question tab there. Just a question there. I'm using MoneySoft at the moment and I'm wondering how easy is it to move over my client's data to BrightPay?
Yeah, so nice and easy, especially if it's the start of the year as well. I'm just going to close this here. Okay, sorry, bring up my screen. Okay, so on your starting screen here of BrightPay, if you click on Import Employer, you can see that we have an import from MoneySoft as well as other softwares out there. You can see we do Iris, QTax, Sage and 12Pay as well. With MoneySoft there, it is basically a direct link in. I don't have a MoneySoft file here, but it's basically what you would do is browse to a MoneySoft file. We have help documentation on our website to kind of guide you through this and what the file is that you need to browse to. But that basically will set up your employer and your basic employee details in BrightPay for you. So nice and seamless there.
Okay, great. And I suppose just to note, if you do have a large number of clients that you need to move over to BrightPay, we do have a migration specialist that is helping new customers with the instructions and moving their information over to BrightPay. So yeah, pop onto a demo of BrightPay and then our colleague Anne does the online demos and she could set you up with our migration specialist if there is a large number of clients.
Okay. Just one in there, Karen. I am taking over the payroll in-house from an external provider. I will be parallel running it for the next 2 months. How do I mark all the employees as paying contributions currently and then indicate ongoing contributions? Yeah, it's great to do parallel runs. We can't kind of highlight it enough just to make sure everything's set up correctly. Obviously, if, while doing the parallel run, you're still, using other software and everything's going through from the other software, then obviously BrightPay doesn't know that. But what you can do, so with regard to your pensions files, if I click into pensions here, okay, and even the enrolment summary here, if I click on the spanner, I can mark employees as included in an enrolment submission. And that removes my outstanding marker, and the same with my contribution. So if they've been submitted in another manner, be it you've manually gone onto your portal and entered the figures in, or another software has submitted them, you can mark them as already included as well. And while I'm showing you that, I may as well show you the RTI as well, because from a payroll perspective, chances are with a parallel run, maybe the other software has submitted your full payment submissions and you don't want to submit them again. And again, you can select your full payment submission, mark as sent and accepted by HMRC. So you can't accidentally submit that in error again. Okay.
Great. Okay, for your GDPR purposes, I want to ensure contact with BrightPay. Most happy to remain in contact with you. I want to ensure contact. I'm not sure what that means.
Yeah, so great. I suppose it's just making sure we have his authorization to.
Yeah. Sorry, Simon, I get you now.
Yeah.
Yeah, Simon is just signing up officially under GDPR to our mailing list by giving us permission to store his information. Okay.
Just to follow up there, just about that's great, thanks. But what about the letters, just regarding kind of the parallel run? Again, is it? I'm assuming here, Mike, it's about the communications letters, is it? Again, what you can do is mark them as sent. If you're in automatic enrolment, choose somebody here. Just if that wasn't done. Obviously, all you need to do is just come in here and mark as done. So if you're flagged that the letters are outstanding, obviously you don't send them again, but just come into the employee's utility here and mark as done, and that will stop the flags coming up there for you.
Oh, excuse me, sorry. Okay, so we are presently emailing payslips to clients. With GDPR next month, is this going to be a problem? How do we go forward? Well, first of all, I would recommend that you go on to our GDPR webinar that goes into all of this kind of stuff in a lot more detail. You can, we'd recommend that you would email your payslips directly to an employee's email address and also password protect that payslip. So that would be that you would be seen to take steps to protect your employee's payslip information. Also, the ICO do recommend that you give your employees access to a self-service online portal. It's not mandatory, but it is recommended. So that's what BrightPay Connect does. It provides that portal where your clients' employees can go on and automatically see their payslip information, and I suppose it cuts out either posting, printing, or emailing those letters directly to the employees. And it also shows the employers or the client's payroll reports. And again, that's automatically available on your employer dashboard. All of that information is backed up to the cloud. So again, you're protecting that information. But I do recommend, it's complicated enough, I suppose. There's a lot to take in around GDPR. So log on to that GDPR webinar. It is very, very insightful. Okay, so next one. We have had issues migrating payrolls from other payroll software, including BrightPay to Iris. And the employee ID for RTI is causing issues with the employee tax code. How can we best migrate our employers from Iris into BrightPay to avoid these issues? Well, I suppose, like I said there earlier on, Rachel, we've just I suppose created a role for a migration specialist in the company for, I suppose, people like yourselves that have a large number of, clients to move over to BrightPay. Her name is Quiva, and so far she's been excellent at helping people move over. We do have like file specs for Iris to move that information over to BrightPay. So perhaps if you wanted to email us or sign up to a demo, and we can put you in touch with that.
Yeah, we can certainly maybe pop you in contact with Quiva. As Karen mentioned, there's kind of various, we cover a few of the Iris products, so it just depends. But generally, I suppose it is a common thing where you're moving from one software to another, and all softwares are experiencing this, and it's kind of how HMRC deal with this, but it's all down to the payroll ID. So if you've had a different payroll ID, obviously being used in Iris, you move to BrightPay. Ideally, we would say to you, if you can and you have access to the old payroll IDs, please bring them across, because if HMRC can see that it's, you're using the same payroll ID, it won't duplicate records at their side. That seems to be where the issue is. Mm-hmm. We kind of have a safety net in BrightPay, albeit sometimes, even though we have this safety net, HMRC still seem to go and do different things with it. But if I pop into employees here and just set up a new employee, just to show you, sorry, just bear with me there, my keyboard. Okay. Under tax, NIC and RTI here, when BrightPay sees a new employee record, we create a payroll ID for you for RTI purposes. So this is where if you are moving from a previous software, if you can use the previous ID that's always been used by the employee, if you can have that in this field here. In the event that you don't have the previous ID, and to stop any issues, what we have here is change of payroll ID. And if I click the drop down, it's important that you have this false include change of payroll ID indicator on the next FPS. When I finalize this employee's payslip now, and the full payment submission is created for me, and that then has this line of, I suppose, coding on it, programming on it, that tells HMRC this employee is existing at your side, but they have a different payroll ID. So HMRC should pick that up. Like I say, we've had issues with that. They don't seem to be, and we've contacted them and they confirm that we're doing everything we should. So it's obviously something at their side. But just to kind of eliminate and try and reduce tax code issues, do have that on. Also as well, we automatically put that on. So if BrightPay sees that you're importing from the likes of Moneysoft or Sage or Iris at the start of the tax year as well, so i.e. if it sees that you haven't done an import from BrightPay 17-18, we have this on the FPS in the background. It's hidden. You probably wouldn't see it. But to avoid, again, any issues, we're forcing that on for you. Yeah. Okay.
Okay. Thanks, Vicky. Okay, so just the last question in here. Is there a separate charge to or for BrightPay Connect, please? So yes, BrightPay Connect is an optional add-on that's additional to the BrightPay payroll, where you would process your payroll. Per employer, it's £49. And for accountants and payroll bureaus, there is significant discounts for bulk purchases. So if you go onto our website and click on the features page, and then you'll see BrightPay Connect prices, and you'll see all of our bundle deals there. So the idea being, if you are an accountant, that you would then charge that to your client as an additional charge of £49. Okay. Well, there's no more questions coming through there, so thank you very much. And if you do have anything else or any other comments, please fill out the survey afterwards, and we'll get back to you. Thanks very much, and thank you, Vicky.
Bye bye.